with another episode of the Fed Advantage podcast. I'm your host, Dan Delatorre, Program Manager at Fed Advantage, where we help federal employees make the most of their benefits. Today's topic is a crucial one for every federal employee to consider: disability insurance. Many of us don't think about the possibility of becoming disabled and being unable to work. But the truth is, protecting your income is just as important as building it. Whether you're early in your career or close to retirement, understanding disability insurance options ensures that your financial future is protected in case the unexpected happens. We'll cover the following in today's episode: what disability insurance is and how it works, the difference between short-term and long-term disability insurance, the specific disability insurance options that are available to federal employees, common misconceptions about disability insurance, frequently asked questions we get about disability insurance, and finally, actionable steps to take now to help secure your income. So let's get started. What exactly is disability insurance? Basically, disability insurance is there to help you cover your income if you get hurt or sick and can't work for a while. It's like a backup plan to make sure you can still pay your bills if something happens. It acts as a safety net, ensuring that you can still pay for your living expenses like rent, groceries, and medical bills while you recover. The great thing about disability insurance is that it can cover a wide range of medical issues, not just catastrophic accidents. This includes chronic conditions like arthritis, mental health challenges, or even complications from a pregnancy. According to Social Security Administration, 1 in 4 workers will experience a disability that keeps them out of work before they retire. It's more common than most people think. Let's break down how it works. There are 2 types of disability insurance you might hear about: short-term and long-term. With short-term disability, it usually kicks in pretty fast, like within a week or 2, and covers you for a few months, maybe 3 to 6 months, depending on the plan. Then there's long-term disability insurance, which is for more serious stuff. If you're going to be out of work for a longer time, this is what covers you. It usually starts after the short-term coverage runs out or after you've been out of work for about 90 days. And it can last for years or even until you retire. Okay, so there's actually a third type of disability insurance called combination disability insurance, which is kind of like the best of both worlds. It combines the quick payout of short-term disability insurance with the long-lasting benefits of long-term disability. There's also a choice between getting individual disability insurance or group disability insurance, which can make a big difference on how your coverage works. So let's break it down. Individual disability insurance is a policy you buy on your own and separate from your job. You can shop around and pick the policy that fits your needs. It's customized, which means you have more control over things like how much coverage you get, how long it lasts, and how much the benefit will be. The premiums are usually much higher than with group insurance, but the big plus is that you take it with you no matter where you work. Plus, the benefits are typically tax-free since you're paying for it yourself. With an individual insurance plan, you can choose between short-term, long-term, or a combination, depending on what works best for you. Then there's group disability insurance, which is often provided by an association, a union, or an employer, so you don't go out and buy it yourself. Since group plans sometimes have hundreds or even thousands of enrolled members, it's much cheaper than an individual plan. However, group insurance usually isn't as customizable. It's a one-size-fits-all kind of deal, so you have to choose from one of the benefit plans available. Some group programs, like Fed Advantage, offer multiple different plan types. So while you can't customize the plan, you have a lot of comprehensive options to choose from. The coverage usually ends when you leave your job. However, some plans have conversion or portability clauses, which will allow you to take the policy with you if you leave your job. Now, let's take a deeper dive into the differences between short-term and long-term disability. These two types of coverage play distinct yet complementary roles in protecting your income. Short-term disability is designed to replace a portion of your income during the initial period of an illness or injury. It typically covers you for 3 to 6 months, but this varies greatly depending on your policy. There's usually a waiting period before short-term disability benefits kick in. This waiting period can range from a few days to a few weeks, during which you may need to rely on sick leave or personal savings. The exact waiting period will depend on the policy you select. Short-term disability insurance generally covers 60 to 70% of your income, and this coverage is meant to help you get through short-term recovery periods, such as recovering from a surgery, an illness, or even pregnancy complications. These benefits can be taxed or tax-free, depending on the policy and the payment method of the plan. So here's an example. Let's say you have a surgery and you need to take 3 months off to recover. Your short-term disability insurance would cover a portion of your income during this period, allowing you to pay your bills while you're unable to work. But what happens if your recovery takes longer than expected? That's where long-term disability insurance comes into play. Long-term disability insurance replaces your income just like short-term. But if your illness or injury prevents you returning from work for an extended period, think months or even years, long-term disability will provide ongoing income replacement. Long-term disability also has a waiting period, but it's longer than short-term disability. The waiting period for a long-term plan is typically 90 to 180 days, meaning you'll need short-term disability insurance or some other income source during this initial phase. Long-term disability policies usually replace 50 to 70% of your income and can last for several years or even until you reach retirement age. Again, these benefits can be taxed or tax-free depending on the policy and payment method of the plan. So another example, let's say you're a law enforcement officer and you develop arthritis in your hands and can no longer carry your weapon. Now, you're unable to perform your job duties and your long-term disability insurance would pay benefits until you reach the maximum benefit age of your policy. Now, let's talk about how short-term and long-term disability can work together to provide comprehensive income protection. Ideally, you want to combine both short-term and long-term disability coverage to ensure you're protected for the full duration of your disability, whether it's a few months or several years. Some programs, like Fed Advantage, offer combination plans that marry the best of both plans into one singular plan. Here's how the combination works. With the short-term disability waiting period, you'll typically only wait a short period before benefits begin. Let's say 30 days. During this time, you may use sick leave, PTO, or savings to cover your expenses. Once your waiting period ends, benefits will be payable for as long as you're unable to work, potentially until you reach the maximum benefit age of your policy. And here's a tip. Some states sponsor disability insurance, which is usually short-term. Federal employees, however, are not eligible for state disability plans because they do not pay into them. So what specific options are available to federal employees when it comes to disability insurance? Let's break it down. You have several choices, including federal benefits and options through voluntary group coverage like Fed Advantage. We'll also cover individual disability policies as an additional layer of protection. So first is we have FERS disability retirement. Federal employees who become disabled and can no longer perform their job duties may be eligible for FERS disability retirement. To qualify, you need to have worked in a federal position for at least 18 months, and your condition must prevent you from performing these essential job duties for 12 months or longer. FERS disability provides an annuity that replaces a portion of your salary, but it may not be sufficient to cover all your living expenses, especially if you're used to a high income level. Next is Social Security Disability Insurance, often called SSDI. Another benefit, SSDI, which is available to federal employees who are unable to work due to a long-term disability. However, Qualifying for SSDI can be difficult because it requires proving that you are unable to perform any job, not just your current position. Additionally, SSDI payouts are often lower than your pre-disability income, leaving a significant gap in your financial coverage. Next, we have voluntary group disability insurance. Many federal employees choose to supplement their FERS and SSDI benefits with voluntary group coverage, like Fed Advantage. These plans are designed to provide both short-term and long-term disability insurance, offering higher income replacement than federal benefits alone. Unlike FERS or SSDI, which can be slow to process and offer limited coverage, voluntary group plans provide quick payouts and more comprehensive coverage that can much better match your salary. The best part about voluntary group coverage is that it's tailored specifically for federal employees, meaning it fits well with your existing benefits and gives you more security if you're unable to return to work for an extended period. Finally, we have individual disability insurance, which you can purchase outside of your employer. While individual policies are often more expensive than group policies, they can be customized to fit your specific needs and lifestyles. For example, you may be able to get a policy with a higher income replacement percentage or add riders for additional coverage. Here's another tip. Federal benefits like FERS and SSDI are helpful, but they often don't cover enough to maintain your current lifestyle. This is why it's essential to explore voluntary group coverage or an individual plan to fully protect your income. By combining those options, you can fill the gaps and gain peace of mind, knowing that your financial future is secure, even if you face a long-term disability. Now, let's talk about some common misconceptions that I hear about disability insurance. First, I don't need it because I'm healthy. This is something a lot of people think. But here's the thing, even if you're healthy now, that doesn't mean you're immune to needing disability insurance down the road. The key with disability insurance is getting it before something happens. If you wait until you're already sick or injured, it's too late. You won't be able to get coverage or the costs could skyrocket. Next is that my federal benefits will cover me. While federal employees do have access to FERS and SSDI, the benefits are often limited and can take months to process. Private disability insurance can supplement those federal benefits and provide quicker, more robust coverage. And finally, it's too expensive. Individual disability insurance is very expensive. However, group programs can drastically cut those costs down. Plus, it's too expensive to become disabled and not have coverage. How will you pay your bills without income? No one wants to become disabled, but you should protect yourself in case it happens. Now, let's tackle some of the most frequently asked questions I get about disability insurance. Do I need both short-term and long-term insurance? Ideally, you want to have both types of coverage. Short-term disability insurance covers you for the first few weeks or months of a disability, while long-term disability kicks in if you're unable to return to work for an extended period. Having both ensures continuous coverage from the start of your disability through recovery. Now, if you're close to retirement, a short-term plan might be sufficient. Depending on the plan, it gives you enough time to get yourself ready to retire. Fed Advantage short-term plan, for example, pays a benefit for up to 2 years, so that even gives enough time to file for disability retirement or Social Security. How do pre-existing conditions affect my ability to get coverage or receive benefits? This is important to understand because each plan is different. Some plans, commonly with group coverage, are guaranteed acceptance, which means that you can join regardless of any pre-existing conditions. They usually have something called a pre-existing condition clause, which will state how long before the pre-existing condition is covered. To use Fed Advantage as an example, after being enrolled for 24 months, all conditions, even pre-existing, are covered. With an individual plan, you will go through medical underwriting, and any pre-existing conditions are usually not covered by the policy. What happens if I recover and can work part-time? Will I still receive benefits? Many policies include a partial disability or residual disability rider. This allows you to receive benefits if you could only return to work for a part-time. This can be a huge help if you're able to work but not at full capacity or hours. In this case, the insurance typically supplements your income to make up for the reduced earnings. Be sure to review your policy to see if it includes this feature, as it provides flexibility during recovery. What factors influence the cost of disability insurance, and how can I lower my premium without sacrificing coverage? Several factors affect the cost of disability insurance, including your age, health, occupation, and type of coverage you choose. Premiums are generally higher for older individuals and those in high-risk jobs. To lower premium, you can opt for a longer waiting period or choose a shorter benefit period. While these changes reduce costs, they do come with trade-offs, so it's important to balance your budget with the protection you need. How do I determine the right amount of coverage based on my income and financial needs? Generally speaking, the rule of thumb is 60 to 70% of your income, assuming the benefit is tax-free. A tax-free benefit of 60 to 70% is pretty close to what you're currently taking home. I always recommend my clients start by calculating what is the minimum amount of money they need to survive. Take into consideration rent or mortgage, utilities, insurance premium, car payments, and so on. Then, calculate what income you have outside of work, such as spousal income. Subtract your minimum amount of money to survive by the additional sources of income to get the minimum amount of income you need. This is the minimum amount of disability benefit you should receive. Anything less than this is not enough to survive on. And if you can't survive off your disability benefit, there's no point in purchasing it. Now that we've covered the essentials of disability insurance and your options as federal employees, let's talk about the actionable steps that you can take to ensure your income is fully protected, no matter what life throws your way. These steps will help you take control of your financial security and avoid gaps in coverage. First is to understand your needs. Take some time to think about what you would do if you became disabled and couldn't work. Do you have savings? What other sources of income can you access? How would it affect your overall financial plan? Programs like Fed Advantage offer free disability financial impact analysis that can walk you through what happens to your finances if you become disabled and don't have insurance, or if you do have insurance, and how your income is affected if you're paying premiums but never become disabled. Take advantage of this free information. Knowledge is power. Next is to consider voluntary group coverage. Look into voluntary group disability insurance to supplement FERS and SSDI benefits, providing a more comprehensive coverage. Programs like Fed Advantage offer comprehensive and affordable insurance solutions for federal employees. Next is to get quotes. Quotes are free and you're not obligated to purchase anything. Understand the cost versus the benefit with this insurance. And finally is to act while you're healthy. The best time to get disability insurance is when you're young and healthy. Don't wait for health conditions to arise. That's going to make your premiums more expensive or result in exclusions. Even if you feel invincible now, taking action early ensures you lock in comprehensive coverage. And that brings us to the end of today's episode. I hope you now have a clear understanding of why disability insurance is so important for federal employees and how you can protect your income using a combination of federal benefits, voluntary group coverage, and if necessary, individual policies. Your income is one of your most valuable assets. It's the key to maintaining your lifestyle, securing your future, and taking care of your family. Don't wait until it's too late to ensure it's protected. If you have any questions or want to receive a disability financial impact analysis, feel free to email me at info@fedadvantage.com. And be sure to check out fedadvantage.com for more information on how we can help you secure your financial future. Thanks for listening, and until next time, keep taking steps to protect your health, income, and financial well-being.